I'm Bob Landaas, president of Landaas Company. I think one of the more unnerving issues for American investors is that we're not driving global growth currently. When I first started managing money in 1975, approximately 14% of the earnings from the S&P 500 came from outside the United States. As of the first quarter of this year, almost 60% of the earnings of the 500 biggest companies in America came from overseas. And the point simply is that the rest of the world is playing catch up. We're seeing global growth accelerate. If you look at Brazil, India, and China, it's almost 40% of the world's population, and they're currently growing on average 2.5 times as fast as the growth that we're experiencing here in the United States. So I'm of course sympathetic to the unemployed here in the United States. I think housing is barely recovering. Retail sales are fairly anemic still in America. But when you look across the world, growth is continuing to accelerate. One of my favorite data points from last year came from the World Bank. World Bank estimates there are about 400 million people in the middle class worldwide. They think that number is going to triple between now and 2030, and none of that growth is coming from the US, Europe, or Japan. It's all coming from Latin America, principally Brazil, and in Asia. And American investors need to make sure that they have adequate investments overseas. Of the 50 top wealth managers in the United States, the average recommendation is to have at least 15% of your stock market investments outside the United States. Now, of course, you have the normal stock market risk, but when you go outside the United States, you also have currency risk. One of my favorite ways to play it is to invest in multinationals that are domiciled in the United States but do significant business in the emerging world. So often clients talk to me about the US economy and not fully appreciate the fact that almost 2/3 now of our earnings come from outside the United States. So I'm as interested in what's happening in Brazil, India, and China, Indonesia, Southeast Asia. Those are critically important components of the engine for earnings. And as long as we see expansions of multiples, meaning that the PEs are going up now, there's been a lot of homework done on that subject, that we can have higher multiples in a low inflation, low interest rate environment. I'm fairly optimistic for the next couple of years for stock prices.